return on equity, the next ratio that we calculate for profitability is return on capital employed. How do we calculate return on capital employed? We will calculate return on capital employed by taking current operating income divided by capital employed. So you know what is the current operating income? COI. So COI is the sales minus the cost of sales minus the SG&A. That is your current operating income, which is also known as COI, or it is also known as EBIT, divided by the capital employed. What is capital employed? Capital employed is the capital which is employed in the business. That is your capital employed. How do we calculate the figure of capital employed? Very simple. So take the figure of net fixed assets from the balance sheet of the company, and you have the balance sheet of the company, of our company. So take the figure of net fixed assets from the balance sheet. And how do we calculate the net fixed assets? Net fixed assets will mean fixed assets minus accumulated depreciation, and that is your net fixed assets. So net fixed assets plus operating working capital. I'm sure all of you will remember how do we calculate the operating working capital. We will calculate operating working capital by taking the trade receivables plus inventory and minus payables, trade payables, and that's your operating working capital. So the total of net fixed assets plus the operating working capital will give you the amount of capital employed. So once you have the amount of capital employed, and once you have current operating income divided by capital employed into 100, and this will give you your ROCE, return on capital employed.